Greetings everyone, Joseph James here with your daily newsletter brought to you by theschooloftrade.com. Today was September 8th, 2009. Hope you guys had a great Labor Day holiday here in the U.S. Hope you guys had a great time off. We, of course, had the whole entire month of August to take our vacation. We're now in the week, of course, first day here, September 8th, of the transition between the summertime trading of August and early September into now what will be the fall time price action that will take us into the end of the year. Now, of course, before we get into our live trade room results today, let's talk about that free resource we have online. Check out our YouTube page /School of Trade. And when you're there, guys, not only should you rate and comment on these videos, but please subscribe to our channel so you guys can get all the new videos that are updated automatically. Now, today we took one trade today, $210 on this one winning trade. That brings our weekly total, of course, first day of the week at 210. And our monthly total, we brought in 210 last week, so it brings our total here in the month of September at $420. Now this, of course, only one or two trades a day have been taken, so we're still looking to see some more volume come back in this week as we transition into the fall. And that, of course, will bring a lot more opportunities our way every single trading day. Let's talk about the term of the day today. The term of the day is the Stutter-Step pattern. Now the Stutter-Step pattern is used in our live trade room. It appears during the formation of a wave setup. Now a wave setup is a breakout trade pattern. It's a trend continuation pattern. It's called our wave setup. And of course, this Stutter-Step is going to be used in conjunction with that wave setup itself. The Stutter-Step pattern ultimately is a big red flag. It shows indecision in the market. In other words, we've lost sight of who has control over price. Now, seeing this pattern tells us no to the wave pattern and potentially yes to the two-step pattern. Remember, the Stutter-Step pattern shows indecision. And indecision is not something that I'm too keen on when I'm looking at a breakout pattern like a wave setup. So the wave pattern is a breakout. Well, if we begin to see indecision in the market based upon this Stutter-Step pattern showing up in our price charts, this is going to tell us that we may want to stay away from that wave pattern because that breakout may, of course, be coming to an end. And we then want to begin looking for what we call our two-step pattern, which is the failure of a breakout pattern. So we see the Stutter-Step happen on our charts. It tells us most likely to stay away from the wave pattern, which of course then gives us a heads up to start looking for a two-step. Now you may hear me say things like the two-step price pattern has disqualified this setup trade, right? So in other words, the Stutter-Step price pattern has disqualified this wave setup trade. So when we're looking for a wave pattern to develop, we look for things like the Stutter-Step pattern to tell us to stay away from it. It's a big red flag. And here's one example of it. Now the perfect pattern, as you guys know, in the wave setup is a strong move up, followed by a quick and decisive move back down to test our trigger line. It's going to happen quickly, and of course it should happen on consistent and steady speed of the tape. Now we see a variation of this perfect pattern when we see a Stutter-Step pattern. Now in this case, we still have the same strong move up, but after we make the move up, we begin to see this confusion. It starts to get sluggish. And the confusion in the price action is apparent because of the Stutter-Step pattern you see in your charts. It's very slow coming back to test our trigger line. And of course, that slow and choppy speed of the tape, we'll usually see red pot bars on our pace of the tape indicator. And most importantly, it's a very easily identifiable visual pattern. It looks like a W or an M, right, for a short trade. This Stutter-Step pattern happens again prior to the test of that trigger line and is oftentimes just a very simple red flag that we should not be taking that wave long or, of course, a wave short in the opposite direction. All right, so come out and join us tomorrow morning in our live trade room, and we're going to show you how we spot those Stutter-Step patterns. And those Stutter-Step patterns are great for breakout traders. They're great for counter trend traders. And those Stutter-Step patterns obviously happen all the time, and we use that to make better educated trading decisions. Now our trade room opens tomorrow morning at 2:45 a.m. Eastern Standard Time, so make sure you guys come out and join us. It's available for all trial members and lifetime members. We'll trade the European session at 3 a.m. and then we'll trade the U.S. morning session as well, 8 a.m. for the pre-market, and of course 9:30 at the open. We'll finish up the day at about 12 o'clock Eastern Time, that's noon time in the markets. We have three specific jobs, that is identify, adjust, and execute. And tomorrow morning when you come on and join us in our trade room, we'll show you guys how we identify the news events, we adjust to those events, and we execute with confidence using our mechanical rules to qualify each trade as we go. Also want to remind you guys, the beginner's course is a wonderful tool to get a jump start on your free 3-week trial. Now here's a chance to take a look at some of the trades we took today. Here was the only trade that I actually took this morning. 843 on the crude. This is a wave long at 70.52. We, of course, on a wave pattern, are taking profits at 4 ticks, 8 ticks, and then we have a runner to trail our stop. So at 843 on the crude oil, this wave long, as you can see here, guys, it broke above that blue line. Now, this blue line was previously marked here because of a recent swing high. Once we broke above that swing high, I had to make sure that our trigger line also got above that swing high. And as you can see here, we had 2 entries here, potentially, for this wave long. So 843, entry was at 52. We took targets at 4 ticks, took 2 off at 4, took 1 off at 8, and then trailed our stop for additional 5 ticks, getting out at 70.57, just before this thing started to crash on down below. All right, so of course that totals it up. That's 8, 16, 21 ticks there on that first trade of the day. At 10 bucks a tick, you guys can see where our $210 for today came from. Now I also want to show you guys a little more information about some of the trades that we didn't take. Now I'm going to zoom in on this a little bit closer for you guys here, but what I want you to see obviously is that it doesn't make any difference if our rules get us into good trades if they can't keep us on the sidelines for the bad trades. As you guys can see here, here are 2 great examples here, one at 940 and other one at 949, 950. Both looking for 2-step longs and simply looking for our rules to line up. We avoided both of these trades, and as you can see, both of these would have saved us money. The first one here at 940, as you can see, right, got above that blue line. But in this case, we had some levels of resistance overhead on our medium time frames. As you guys know, we use multiple time frames in our charts. And of course, our methodology using multiple time frames allows us to have the benefit of having very precise entries on this fast time frame, but have, of course, the luxury of using the more powerful, right? Of course, those levels will have more sticking power on slower time frames. So we add the slower time frame levels into our faster time frame, and as you guys can see, did a wonderful job here on these 2 examples. First one at 940, and then the second one here at 950, both of which looking for those 2-step longs, and our rules told us exactly what to do, when to do it, how to do it, and what to do if something goes wrong. Now, of course, I want to encourage you guys to come out and join us tomorrow morning. We're going to go over all of these rules with you live in real time. Our room opens up at 2:45 Eastern Time. Mondays it opens up at 7:30 a.m., but that's no need to worry about that. 2:45 the rest of the week this week. We'll do a free webinar for you guys on Tuesdays and Thursdays at 11:30 a.m., so come out and join us for that. We'll trade any market. We'll give you live calls with entries, targets, and stops, and of course, we're going to help you guys manage the trades, taking profit and exits all the way. There'll be plenty of opportunities for questions and answers, guys. We'll be doing education all day long, so bring your questions, and I'm going to help you guys see the market in a completely different way. We'll give you free 3 weeks as part of our free trial. No credit cards needed, guys, nothing at all. Want to encourage you guys, though, as a beginner or as a new free trial member, pick up a copy of the beginner's course. It's recommended for all free trial members. It's going to give you a nice, firm foundation of knowledge to build on as you join us for a free 3 weeks. And remember, guys, please rate and comment on this video and subscribe to our YouTube page. My name is Joseph James. Hope this video has helped. For more information about lifetime membership, that's right, lifetime membership, drop us an email, sales@schooloftrade.com. Again, my name is Joseph James. I'm the developer of this method of trading. I want to thank you guys for your time today. We'll see you guys tomorrow morning in the room, 2:45 a.m. Great to have you guys back. Looking forward for some great trading here the rest of the year. Hope you guys had a good vacation because it's going to be busy. We'll see you guys tomorrow morning, 2:45 a.m. Eastern Standard Time. Bye-bye for now.